Hello and welcome to today's video, which is called S&P 500 breaking or breaking out. This is a very key question and we will dive into more insights as to which way the odds are leaning currently. Thank you for liking this video and subscribing to the channel, it helps greatly. You know pretty well what I do on my site and what's in it for you in all the premium services and real-time coverage. You know that yesterday, more than 24 hours ago, I'd been banging the bearish crypto drum, picking MicroStrategy strategy as the bearish play of the day. And within this video, thanks again for your likes, I will walk you through how we in the live trading channel took advantage of what was unfolding. This is directly linking to my Sunday's call for the complacency in Bitcoin to end and prices to go down. And that's exactly what we had seen. Fake attempt of Ethereum to show some strength and rolling over like a cheap suit. So that was the starting situation yesterday. In yesterday's video, to which I will be linking as well, I had featured this very chart. This is the tweet and what had been my predictions as to the Bitcoin price, what is more likely to unfold next. And I called for a clear break of 92,000 and in the end, very fast, another logical support level of roughly 88,000 gave way all the way to almost 82,000. Of course, as well, my call for volatile bottoming of equities had, of course, as well come to fruition. The same goes for the necessity to protect long gains in precious metals. That has as well come true. The big event of yesterday also were, of course, Nvidia earnings, and we will be covering them within this video as well. And the wild card had been the idea that 25% tariffs against European goods are coming. And my final remark, exclamation mark, was that yields are retreating, globally retreating. Hence, the long Saturday presentation regarding yen carry trade. Here we go with another tweet where I had been summarizing the breath signs, encouraging signs of short-term bottoming, however highlighting all the uncertainty and vulnerability which we saw play out both ways with a nice breakout attempt early in the session yesterday and then rolling over on the tariff news. And now let's go into the MicroStrategy puts, where I had been shortly after open seeing that the 255 area was where prices were. I did not consider that move yet as to exhaust it. Therefore, I preferred rather the upper end of that area at $257 to start calling for a nice opportunity to open shorts or initiate puts. So that was the idea, and you know that this and that MicroStrategy returned comfortably lower below 255 yesterday, and that's where I cautioned about taking profits because the white candle, the daily one, had been completely retraced. So such was the outlook in cryptos and how it is going. Let me just come back to this chart. We see a really tepid uptick in Ethereum, which is not at all surprising. Yet this Bitcoin upswing does not have my full vote of confidence. However, I consider it not yet having played out, and the 88,000 area can be retested from below. And here is the daily retracement, coming back to the opening values of MicroStrategy that I had talked about approximately 1.5 minutes ago. And now let's switch over to yields, how they are looking following yesterday's close. And you notice a very common theme ever since Friday's consumer sentiment revision data and the very poor reading of services PMI, raising all the stagflationary fears that I had commented on late Friday, and been covering that in an extensive weekend article. And basically right after the data came out on Twitter, we had seen continued retreat in yields, and that's of course whether we call it a growth scare, a recession on the horizon, or plain old-fashioned 1970s stagflation. It's all basically just the same what it means regarding equities. Trouble to maintain the lofty profit expectations, and that's the theme that we had seen confirmed throughout this week, and markets duly punishing companies that guide lower or underwhelm in their earnings, which was as well what had happened regarding Nvidia. And so I will show you the slide further on where I'm summarizing the tweet in as few bullet points as possible. Regarding the situation with Europe, those 25% tariffs on the horizon, we see dollar being yet again somewhat underpinned, no matter the retreat in yields, which is quite natural. And if we examine dollar moves ever since Monday, its strength had been rather a matter of appreciation against the euro than against the yen, where the orderly move is continuing no matter the slight retreat in Japanese government bond yields as well. A reminder of more than 24 hours ago, where I have reiterated prior days announcement of seeing budding improvements in S&P 500 breadth, which was exactly what happened, and that led to the tentative bottom call, which we had seen fulfilled yesterday in a very volatile fashion. Then here we go as regards Nvidia earnings, and market correctly sensing that the upcoming margins would be not as lofty, not as rosy as had been the case in prior quarters, meaning the going is going to get tougher than it had been in the past. And here we go with the S&P 500 breadth chart. This is the daily chart. If I showed you the weekly one, it would be looking equally unconvincing and bad. We had seen upswing rejection. That was the matter of tariffs, and ever since Friday and those stagflationary data already discussed, the pressure is rather on the downside. The buyers have not been able to make any new high. Today's data, GDP, what's that going to bring? Is it going to be coming on the outside or not really? I have my pick that it would not be a stellar beat at all, and unemployment claims had been on the record for approximately 5 days. That this would be quite underwhelming, meaning that they would overshoot those expectations, only highlighting the fears about consumer strength. And this is the daily chart. This one is showing, is not looking as not gloomy, not pessimistic, but definitely not the optimistic daily or weekly chart at the moment. Still a pattern of lower lows, and those levels, those two levels marked on S&P 500 futures, they had been presenting a credible obstacle. However, yesterday's lows retest had held, and S&P 500 is readying another move to the psychological 6,000 and slightly above, as shown on the lower turquoise one resistance level. They are readying up another meet, and it's a matter of how stagflationary or not, healthy or not, orderly or not, or nothing burger, or however these daily data would be perceived today. And I have slightly hinted at what I expect to be unfolding, and of course I will be diving into the full details with premium clients in the daily analytics publications. So here we go, that is the setup, and forget not as well that the Kumo cloud had been overcome, so that just adds to the short-term uncertainty. And tomorrow we have core PCE, so plenty to look forward for, especially given those conflicting information when it comes to prices paid as shown this week, or latest import prices that kind of speak against each other as to whether we are going to be expecting meeting higher or lower core PC readings tomorrow. So stay tuned for a detailed update before tomorrow's open. Adding to the short-term mixed picture, we can see though that tag had been outperforming, and not even the unconvincing Nvidia earnings did sink it. So the picture sectorally, I mean, is mixed, and the level of short-term uncertainty today is high, and this is the key takeaway. And we will be riding the opportunities, whether swing and intraday, in our channels with clients. My join page will help you select what's right for you based on what and how you trade. Thanks again for liking these videos, my professional journey, no obligatory disclaimer, and let's talk soon again.